Hello, yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. This is 21st of September. So I'd like us to today, basically, we just want to look at a very simple strategy, a strategy which we can use for trading cryptocurrencies. So this is what I personally use to trade Bitcoin. I also use it to trade Ethereum, and I also use it to trade other instruments like this one, Solana. These are some of the instruments which I use to trade with this strategy. The first one is Bitcoin, and then the next one is Ethereum, and then the next one is BNB. Then the next one which I trade with it is this is Ripple. So the strategy is a 15-minute strategy, but you may scale it up. Maybe you may use a 1 hour time frame or a higher time frame to see exactly how it goes. If it works best for you, then you can as well use it on 1 hour time frame. But for me, I use it on 15 minutes time frame. It's very simple but very productive. Let me clear my chart so that I can start explaining it in a way that all of us should be able to understand it. So we have that, and then we have this chart like that. So this is cleared, this is cleared, this is cleared, and this is cleared. So this strategy revolves around identifying the previous candle's highest high, especially the previous day's highest high, and also the previous day's lowest low, then observing what happens around those places. So you'd go to a chart. We'll start off with Bitcoin. I'll go to chart like this, and then I pick this day's highest high, then I pick also this day's lowest low, like this. So this is we assume that this here is the previous day's overbought area, and we also assume that this here is the previous day's oversold area. So when the price gets to this point, and then the list of indicators which I'm going to give you, if any of them shows us oversold, then that should give us a good place to look for a buy. So we'll mark this. We mark this, the entire area. This is the previous day's highest high, the previous day's lowest low. We assume that this is the overbought area, this is the oversold area. So when the price comes down and touches this area, we now attach another indicator, an oscillator. We attach relative strength index, you can see that, and then the other indicator which you attach is the RSI, relative strength index. So that's basically the strength of that given instrument at that given time. So you see that this is the place where the price got oversold from, and this is the price where the instrument got overbought from, and then the price got to the same place at this time here. So we'll mark this point, that very instance when the price is breaking below the previous day's lowest low. We check if both the indicators are below their oversold levels. So if we have the RSI below this one, below 20, and at the same time we have the stochastic below 20, then this is a good place to look for a buy from. So instantly when this happens, we notice that this is now a buy, and this is a buy, and this is a buy. We pick that buy position. So if you took this buy position, you can see that the price basically just went up slightly before coming back down, but this is okay. Sometimes you may enter a position like this, then the price goes down and hits your stop loss, there's no problem. But when the price comes back again the second time, you can see the same formation. So we have price being below the previous day's lowest low, this horizontal line. At the same time, we have this, the stochastic is below 20, and at the same time we have the RSI below 30. So this could have been the correct place to look for a buy from. If you're on this chart when this was happening, you could have taken a very good buy position, especially around this area here, and around this area you can see that this went successfully. This one here also went successful. We had a very good buy here, we had another very good buy here. So it may seem that we are having very few trades, especially because we're looking at the daily time frame, but that is only true because we're looking at one time frame, one chart and one time frame. If you had to look at other charts for the same formation, you'd get it very well. So we'll look at another example, like on this date here, the second day after that. Let me clear my chart. So the second day after that, we have this as that day's highest high, and we also have this as that day's lowest low. So we highlight it. You don't have to do all this, especially if you've mastered it correctly. You can just know that this is the previous day's highest high, so you monitor when the price gets there. We have the same zone. This is the previous day's candle. You can see that. This is the highest high, this is the lowest low. So as I said, this becomes an overbought area and this becomes an oversold area. So when the next day's candle opens and the price gets to that point, instantly we check if all our indicators are above the oversold area, overbought area. So when the price itself crosses or touches this line, which is at this point, you check instantly to see that is the stochastic above 80 and at the same time is the RSI above 70. If that is true, you pick a sell position. So that's not true here. We have the price touching this level, but the RSI is below, but I mean the stochastic is below 80, but the RSI is above 70. So this is not a very good one. The next example is this one. So this is a very good one because you can see that it started somewhere here. So you see that we are above, the stochastic is above, the previous is above 80, the RSI is above 70, and at the same time we have price above the previous day's high side. So this here is a good place to look for a sell from. You could basically have taken a sell position expecting the sellers to push price way downwards. So we could have taken a sell there, the price goes up, it does everything it does, but it's still a buy. You can see it's still a sell. You can see it's still a sell, still a sell. So you can continue to pick more sell positions, especially around this area. And even when the price goes up, like in this case here, you see some sort of divergence. That is, the price is giving us a buy, but the indicator is giving us a sell. You can see this. Look at this. You can see that the RSI, the stochastic is downwards, the stochastic is bearish, the stochastic is bearish, but at the same time the RSI is upwards. So this is a uptrend, this is downtrend, this is an opposite scenario. So this here could give us a good place to look for. So if you took a sell somewhere here, but the price fails to go down immediately, you may still wait and look for a sell, especially if the price comes back and touches that level there. So this here was a good place to look for a sell from. This was a very good place to look for a sell from. As I mentioned, we assume that this is an overbought area. The previous day's high size is an overbought area, and we expect that when the price gets to the same place the next day, it will still act as an overbought area. So that's why we look for a sell position, especially if these two indicators are showing us the same thing. So we'll get another example now. We'll use a different chart, this one. So this here doesn't look very good. I don't see, we have high here, we have a low, the price remained inside it, and then here we had that, and then we had this. You can see here the price basically closed below, so we have that, and then you have the RSI. So in this case you can see that the price actually closed below. This was a very good place for a buy, but it didn't mature up because the price just went down. So if you took a buy position based on the same thing, you could have ended into a very good loss. So something else, what you must understand is that there is no strategy which will work for you 100% at a time. Some will lose. Sometimes you'll find positions which are losing, and sometimes you'll find places where you enter trades and then they just go your way. So something else, between Bitcoin and Ethereum there is some positive correlation. So when you see a buy position but you can't find the position here, it's better to ignore both of them. So if you can't find the same position here, if you're looking at this, you find a position but you don't see the same thing here, you better not buy it. But if this is giving you the same thing, this is giving you the same thing, you're supposed to keep buying it. If this is showing you, Ethereum is showing you a position, but you can't find the same position on Bitcoin, it's better to ignore it. But if Bitcoin is giving you a position, but this is not giving you a position, you can still go ahead and buy Bitcoin. Bitcoin tends to hold much more compared to this one here. I hope that is clear. I hope that makes some good sense. So Bitcoin tends to hold much better. If you're following it just keenly, you can make a lot of money, especially if you are joining overbought areas based on these two indicators and the previous day's highest high, or the previous candle's highest highs, or the previous day's lowest low. So let's get another example. You can look at this here. We have that, and then we have another one here. So this is the previous day's highest high, the previous day's lowest low. You can see what happened. The price came up to that point, it touched it, so it touched it. You can see, well, the price was here. At the same time, these two indicators were overbought, so we had an overbought area, which means this was a good place to look for a sell. If you took a sell there, the price went perfectly as we forecasted. So this is why I'm saying, if you find a position on Bitcoin but it's not here, it's better to pick it. And if you're patient enough, it's better just to keep looking for the same thing only on Bitcoin. If you cannot, then you can look for it on the other charts, but mostly check it on Bitcoin. So here a sell did not work out, but we just need one position to work. Like if this works out, you leave the other one. Also look at this one here. This is the previous lowest low. You can see what happened. It was below. The price touched that level. This is below. So we have an overbought area, oversold, and the price is also around the previous day's lowest low. So this is a good place to look for a buy from. This is a case that went wrong. The price crossed above it completely, so we didn't get a position there. We have another position here. So this is not a good one. Looks like it's a good one because the RSI was above, stochastic is above, RSI is above, stochastic above. At the same time, the price is touching that, so that could be a good position. We had another one here. So the stochastic is above, RSI is above. At the same time, the price is above this green area. So we have another one here. This is a good position. You can see that the price went down. So I hope you have seen that up to now, that most positions that we are getting now, they're actually just scalping positions. So if you pick a sell here, it's better to remain just for some seconds, get a very good lot size, enter that position, go in maybe for like 2 pips, then step out. But you're going to be much more successful in the long run. So in the long run, you enter position maybe somewhere here, leave it loose, don't attach a stop loss to it immediately, let it go your way just for some few pips, and then you step out of it. So I hope those are very good examples. That's the only thing I wanted us to look at today. I hope you've got something. We'll meet again next week at the same time. So thank you and see you.